Hello traders, Gary Wagner here, approximately 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 27th day of September 2013, and this is the daily report for gold and silver, our weekend review. Following a statement made by the Chicago Bank president, we had an upside spike in the precious metals markets as he came out and said basically what Ben Bernanke said, and that is that tapering will probably not begin till next year. You can see the spike that we saw in the marketplace. It all happened really in a 1 hour period. This is a 1 hour chart, of course, and then has been sideways since that, currently trading up about $13 on the day. High $13.46, low $13.20.90, and as you can see, current print $13.36 and change, as I said, puts it up roughly $12, $13 on the day. Silver also trading higher on the day, $21.75. That's our current print. Puts it up about 10 to 11 cents higher, $21.43 on the low, $22.25 on the high. Interesting though, we have gold in terms of percentage gain up almost 1% and only about 1/3% higher in silver today. Noteworthy. We are looking at a 480-minute chart, standard candlestick format with one basic fib retracement that I have entered in here. The fib retracement really covers this most recent rally, 1180, 1181, up to about 1433. Once we do put that in and gain some parameters, 23% here, 38%, and 50%. What kind of hits our eye is that over this last week, we have pretty much been trading right within this range. Absolute resistance, we talked about this yesterday for my daily viewers, but for the weekend subscribers, absolute resistance 1374. It's based on this 23% retracement. We haven't really seen that. Next real level of resistance, 1337. It's a 38% retracement level. If we draw our line across, you can see that when this market came up, it did pop up above it, but found resistance and traded back actually to the 61%, which is 1277, before rising to its peak at 1433, 1434, comes back down, dips a little bit below this, but you can see right in here, it's a fairly supportive area. We have recognized 1307 as being a pretty critical level of support, necessary level to hold if we're going to see any kind of bullish activity. Now, what we're getting in this market is knee-jerk reactions as the Fed comes out, makes a statement, another statement comes out. Here you can see the kinds of moves that you're getting even on a 480-minute chart, where you're getting these tremendous spikes, and then you're getting these tremendous spikes back down the following day. This is following the FOMC meeting right in here, this one long candle. Following day, of course, you had pretty much a sideways market. Statement comes out, basically says by another Fed president of one of the banks, and he says that tapering might begin as early as December. Boom, market comes back down, but finds support at 1307. And then you had the statement by the Chicago president today saying tapering probably won't begin till next year. So you've had this market really oscillating, and more importantly, the marketplace itself is trading on these statements. There's no way for us to know these statements in advance, and then there's no way to react once the statements come out, because you get these immediate spikes within the marketplace themselves. I am not convinced that we have a true defined trend. Rather, I see this market oscillating back and forth in a nearly defined range, that range being anywhere between 1374 on the high and 1307 on the low. So call it about a $60 to $70 range, and that's what we're currently seeing. Now, once we begin to look at our daily charts and charts that give us more of a compression in terms of time, we can really see how this market coming in towards the end of the week on this daily chart, this represents, each bar obviously represents day, each candle, really trading within not only a defined range, but that range is really narrow throughout the week, with the high being roughly 35.36. It's currently where it's at. The low being roughly at 1300, 1307. That is this particular fib retracement. And of course, this 50% retracement right here corresponds to what we were looking at before. which is the entire length of this rally. So what are we looking at right now? Well, as we go into the close, the fact that we're closing at maybe a little bit above, a little bit below this critical resistance area really tells me that we want to see how it reacts come Sunday, meaning Monday in Australia and Hong Kong as it opens up. Are we going to form a base and move off of that? Or are we going to find resistance here and kind of trade back to the lows 1307? That's something that we're going to have to see. But I have noticed something interesting in the chart. And really to see it, we want to go ahead and compress this a little bit. And you'll get an idea of what I've been looking at. And really what I'm seeing is a true compression scenario running into the market. What I mean by that is as follows. Now, this of course is our daily chart once again, but when I simply draw a line from these two tops here, draw a line from our lows here, you can see even on this chart how we are approaching some sort of an apex in this compression, because we are absolutely getting a series. Our lows are moving up, our highs are moving down. If we compare this high to this high, this low to this low, we are certainly getting a compression. And it will be interesting to see how that unfolds and where the market actually goes. Now, one of the other reasons that I believe that we could see a significant downside move, what I would expect is something where it trades within the range. Went to the upper end, to the lower end. Wouldn't surprise me to go back to the upper end, lower end, but I do believe at some point we'll see a break. And as I said, I believe that the strength right now is in the bearish camp, and I do believe that the pressure, the downside pressure, is a lot stronger currently than any upside potential that we have currently in the gold market. 3-day chart, we're looking at it. This has our major count. We have been talking about this over the last month or so, and most importantly, you can see as we draw in this upper resistance area, we failed to take that out. If in fact our current count puts us in 4, we're probably going to go into some kind of a wave 5 following this market moving maybe back up to the top of this resistance area. Of course, what I would like to see is a break above this resistance line if we get any kind of significant rally, and that would move us back into a bullish mode. As long as we broke above this, as long as we're trading below this, the pressure has got to be to the downside. The other thing you might want to take a look at, MACD, MACD, 3-day chart. It is absolutely going into an area in which it looks like it's going to cross and then begin to break lower. We'll have to see once again how that unfolds, but there's no doubt it is something that warrants our attention. There's been nothing significant to show us with the kind of news that's out there, really nothing very, very significant to show us in terms of the size of the kinds of moves we're seeing in the marketplace based upon the fundamental data that is coming out. Now, as my daily subscribers are well aware of, we have been sidelined over the last few days. I haven't been making any recommendations long or short in the market. When we look at the half-a-day Japanese average candles, it, to me, truly illustrates why I've had that belief. Take a look at this most recent activity, this being from right after the Fed meeting, market moves up, and you can see we are getting these alternating candle colors. When you have a defined trend in the marketplace and you look at it through a Japanese average chart, you can really see that defined trend as a series, a consecutive series of a single color and candle. On the upside, obviously green, and then on the downside you will get, you know, consistently one after the other, red, 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 all the way down. You might get a single green in there, of course, or you might get a single small red as you get a small consolidation in the market. But for the most part, you can see a defined trend as a consistent color and fairly nice body size. Well, we're certainly not getting that right now. This shows this little clip up, but over this last week, when we look at how it's been trading, it's been oscillating back and forth with no really clear direction and no really clear trend. Now, we've talked about support areas. We've talked about resistance areas in gold. I think that we are seeing something comparable in silver. And what we're seeing in silver is as follows. We have 1305, 1307. That seems to be where we have had a strong base forming in gold and what I believe to be good support. I also believe that in terms of support in the silver market, the first level is 2080. That's right here, and you can see that comes right after this small gap in the market, this little gap right here. The next level is 2164. The market closed at 2179, so it's trading above that. That to me is support. Resistance, well, it starts at 2248, but real resistance right now I believe is about 23.5, 2350. And again, range bound within this market also. It hasn't been able to break above recent highs or lows, and we have not seen a clear definition of trend, although we have seen some real downside pressure in silver. I really believe next week is going to be a most interesting week, and that we have a couple of things coming to a head, especially the debt ceiling. We'll see how that unfolds over the weekend and how that carries over Monday overseas as well as Monday in the United States. This has been Gary Wagner, wishing you as always good trading. We'll talk to you next week for another daily update review. Bye-bye.